Well, it's that time once again. We've waited patiently for 45 days after the end of Q3, and now the 13F filings are out, aka we get to see what all the big name investors have been up to recently. You know, going into this quarter, I was pretty sure that we were gonna have a quiet one. The S&P 500 has just continued its charge, and usually that means for these, super smart, super rational investors, they don't do much. Well, I was wrong because they did a lot. So in this video, I'm gonna go through the biggest moves that were made in the most recent quarter, and take it away, John.
And it starts right now.
Okay, now I've already made a video touching on this already, but the first big news story is Michael Burry betting against the AI bubble. Now, this is a crazy story for more reasons than you might think. So it starts with Sion's 13F, which showed that Burry ended the quarter with a big put option position on both Nvidia and also on Palantir. So by buying put options, you're just betting that the stock is going to go down. And well, normally we don't get all that much information on put options in the 13F, but this time around, Burry actually filled us in over on his Twitter. He has in fact spent $9.2 million buying 500 put option contracts against Palantir that expire in 2027. Now, his strike price is $50, which technically means that if he held the options through to their maturity, he would need the share price to drop below $50 to be in the money. Now, that's a tall order with Palantir currently at 170-ish per share. But in reality, because there's so much time for this option to come good, even if Palantir started heading south by 10-20%, the value of Burry's options contracts would substantially increase as the probability of his required outcome would have risen, and there's still a lot of time left for that to happen. So the play here is for the share price to fall a bit and then be able to sell the options contracts for more than you bought them for. Now, he's also done this with Nvidia. In the case of Nvidia, he's bought put options against 10,000 shares, so that's 100 put option contracts, each representing 100 shares a pop. And in this case, he's got a strike price of $110, and these expire in December of 2027. Now, Nvidia's share price is currently around $190 per share, so the play is undoubtedly the same. If the share price were to fall a bit, the market value of Burry's options would rise as the probability of the options expiring in the money would have risen with still plenty of time to go. So he would then be able to sell the option contracts for more than he paid and make a handsome profit. So that was the first big news we got from Michael Burry, but that is not where the drama stopped, because it turns out Michael Burry has since closed his fund. I am not kidding. He posted this screenshot showing that he has deregistered his fund, and he sent out a letter to his investors, which was later leaked on Reddit and Twitter, saying, quote, "With a heavy heart, I will liquidate the funds and return capital. My estimation of value in securities is not now and has not been for some time in sync with the markets. With heartfelt thanks, but also with apologies, I wish you well in your future investments." So there you have it. Burry is calling it a day with Sion. Now, I don't necessarily think this is the last we will see of him, but for the time being, it seems markets are being too irrational for him to even play in a meaningful way. He hinted as such in a previous tweet where he said, quote, "Sometimes we see bubbles, sometimes there is something to do about it, sometimes the only winning move is not to play." So unfortunately, it seems as though this might be the second last or the last 13F filing we see from Sion. Pretty crazy. So that's the first big news story. And before we move on, I just wanted to take a very quick second to tell you guys that over on New Money Education, we are currently having a Black Friday sale on all of our courses. So at the moment, you can get both Stock Market Investing for Beginners or our most popular course, which is Introduction to Stock Analysis, at a 40% discount. This is the business that I started a few years ago, basically trying to reverse the trend of shitty investing courses on YouTube. So both of these offerings are packed full of information. Introduction to Stock Analysis is basically a 7-hour in-detail guide on the full Warren Buffett strategy. We're talking reading financial statements, 3 different stock valuation methods, how to stress test a moat, literally everything. We now have over 5,000 of you guys that have taken one of our courses, and the feedback we get is really, really amazing. One of the big moments for us was we got the courses reviewed by a professor of stock valuation at Texas Tech, and he said that these were the best courses he had ever seen, which we were like super, super pumped by at the time. So if you're keen, use the code BF40 and get in with a big discount. And thank you guys always for supporting what we do. The money we make on those courses goes straight into paying editors to keep the free content flowing on YouTube. So we really appreciate the support. But with that said, moving into the second big news story for this round of 13F filings, we have Warren Buffett moving and shaking with the Berkshire portfolio. Now, I already spoke about this in my last video, so I'm going to keep this one quite brief, but the big news from Buffett this quarter was that he has invested $4.3 billion into Google Class A shares. This position now slots into 10th place in the Berkshire portfolio, and this is really taking the value investing world by storm at the moment, mainly because there's been a lot of investors arguing that Google is actually losing its moat to challenges like ChatGPT disrupting online search. That plus a PE around 30, and to many, seems a little risky. So what is Warren Buffett doing? Well, as I said in my last video, I'm not entirely sure here, but I honestly suspect this is just Buffett understanding that Google is a cash producing machine. It continues to post exceptional results. It has an unbelievably strong balance sheet. And I reckon Buffett sees that despite the lofty valuation, it's probably a better place to park cash than short-term US treasuries. So that's the Google buy. Again, check out my previous video if you want more depth on that one. But the other big news story out of Buffett's 13F filing this time around was that he has continued to sell down Apple. He sold another 15% of his Apple position in the last quarter, taking the holding down to 22% of the Berkshire portfolio. Definitely nothing to panic about if you are an Apple shareholder. This is still Berkshire's largest holding by a very long way. But I think the selling that's gone on over the past year or two, is a decent reflection of where the valuation of Apple currently stands. Remember, Buffett bought back in 2016 at a multiple of around 16, and now the PE has expanded to around 35. So there's no doubt Apple is priced to perfection, or maybe a little bit over. So doesn't it all surprise me that Buffett is taking some profits while still obviously backing the company in over the long term. So that's Berkshire. And then from there, the third big news story of the 13Fs was actually out of Bill Gates' giant $36 billion fund that he runs for his charity. And the big news is that he has significantly cut what was his largest position, and that company is Microsoft. In Q2 this year, Microsoft was a clear number one for him, representing 27% of the fund's portfolio. But now, as of the Q3 13F filings, we can see that the foundation has sold 17 million Microsoft shares, with the position down to just 13% of the portfolio now, worth around $4.7 billion. So why has he done this? Well, it could be a few reasons. One thing frustrating Microsoft shareholders at the moment is the increasing AI infrastructure spending going on. Microsoft recently reported a record capital expenditure of nearly $35 billion in the quarter and warned that spending is on the up this year. And this is understandably worrying investors that the price of sustaining this AI boom is just getting steeper and steeper. Then beyond that, you've also got a key Microsoft partner in OpenAI at the center of a web of circular deals that's raising eyebrows from investors left, right, and center. As the CEO Sam Altman recently said, they've committed to buy more than $1.4 trillion in computing power across the next few years, with honestly pretty little detail on how it's going to fund that purchase. And with Microsoft a 27% owner in OpenAI, this is a topic that Microsoft shareholders will definitely be watching closely over the coming months. But beyond those reasons, I personally think that the sell down of Microsoft comes down to a much simpler reason, and that is that the stock has been absolutely skyrocketing over recent months. Back in April, the stock was at $3.50 per share, and today it sits around $500 a share. So the stock has risen over 40% in absolutely no time. If you zoom out to the 5-year chart, you can really appreciate the spike up in price. This share price appreciation has now left Microsoft with a PE ratio of 36. Now, don't get me wrong, it's a wonderful business and deserves to be priced higher than its peers, but at 36, investors are certainly expecting Microsoft to grow a lot over the next few years to justify their rough $4 trillion valuation. Now, they might do that, but the point is it's now expected that they do. And if they don't, as Michael Burry was warning recently, you can expect Microsoft and many of these other AI-focused companies to get re-rated by Wall Street pretty sharply. So that's the story behind Bill Gates' big reduction in Microsoft. Now, next up, we have a doubling up from one of the world's best value investors. We are, of course, talking about Seth Klarman, and he has doubled his position in Restaurant Brands International. This position is now over 10% of the Baupost portfolio and worth over $500 million. So if you haven't heard of Restaurant Brands International, they are the parent company of 4 major fast food brands: Burger King, Tim Hortons, Popeyes, and Firehouse Subs. Now, they don't own the restaurants themselves, they operate on a franchise model, so their revenue is generated through the franchise fees that they collect, and they also get a percentage of the ongoing revenue from each store. Now, overall, this is a $22 billion business, and it's also well loved by Bill Ackman. And why is it that these value investors love Restaurant Brands International so much? Well, a couple of factors really. Yes, they're growing decently well. Operating income is up. Same-store sales growth was 4% in the most recent quarter. But the overarching thing here is definitely the moat. This company owns some really, really well-recognized brands, and they're set up with a franchise model, which means that A, they're capital light, so it's scalable, and B, cash flow is more predictable because they mainly make money through the fees that they charge, rain, hail, or shine. Now, to be honest, this isn't a company that I study as deeply as others. So if there are shareholders out there and you want to add more info in the comments, please do so. But this seems to me to be very much a Buffett style business. And what do you know? This was actually in Buffett's portfolio up until 2020. Now, at a PE ratio of 24, it's not a screaming bargain, but remember, you're not only buying earnings growth here. RBI is also paying roughly 3.5% dividend yield at the moment, so a good chunk of your return comes from that steady income stream as well. And with that said, guys, they are the main stories out of the 13F filings this time around. Honestly, not much else happened. Lilu didn't do anything this time around. Bill Ackman didn't do much, just reducing Google by 10%. Guy Spear only had one move, which was a 60% reduction in Micron. That's kind of interesting, I guess. Monish Pabrai had one new position in Transocean, which own and operate big oil rigs that they can then lease out to companies that drill for oil and gas out at sea. Honestly, I do not think Monish Pabrai is winning any climate awards with his portfolio over the past couple of years. It's been oil, gas, and coal. But yeah, overall, those are much smaller stories in my opinion. The big ones were really Michael Burry closing his fund, Buffett's Google investment, Gates really significantly reducing his Microsoft stake, and Seth Klarman betting big on Restaurant Brands International. So overall, hope you guys enjoyed the video. Please leave a like on it if you did, or if you found it useful. And remember, for a limited time, you can get access to our new money education products 40% off. Our most popular course is Introduction to Stock Analysis. That is the full walkthrough of the Warren Buffett stock selection strategy. 7 hours, all really, really well put together, just like our YouTube videos are. That's the quality you can expect from us. If you want to check that out, we would really appreciate it. BF40 is the code to use at checkout. But with that said, thank you guys very much for watching, and I'll see you all in the next video.